All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour this morning. It's a very interesting open. Let's start with the challenge. The challenge here, and then we'll go look at a few other things here. With the challenge, there are no new triggers here this morning. There are some that are close. I'll talk about Micron a little bit later. Micron's very, very close, but we have a lot of things like an MGM, which could be a bullish trigger, and last week was very close to being a bullish trigger, just not there. Just not there yet, and likely won't trigger with the action that it sees right now unless there's a snapback. But overall, just not a lot of triggers out there with the algo. Walmart gap down has kind of surged on higher. This has a bullish run in it or a bullish mode in it, but just not a great risk reward element associated here to it. Nike, we saw reverse from a bearish position into a bullish position. I was asked this weekend whether it had anything to do, whether Friday's move had anything to do with Tiger Woods having a pretty good day at the Masters. And yeah, maybe. Is today's gap up because he won the Masters? Yeah, maybe. Right? We can never say for 100%, but we can go back and look over time. And when Tiger wins, Nike pops. But it's one of those where, all right, if we use that argument, then what's the excuse for Under Armour going up? Right? Yeah, Tiger has nothing to do with Under Armour. So, we've seen Under Armour go up to the same degree. So, is it a great argument? No. But from a technical standpoint, no new triggers out there, right now. So what does that mean? Well, that means there's nothing for me to react to, nothing for me to put money into play with, and to go. Now, one thing that could happen today, it would take a lot more selling than what we're seeing so far, but one thing that could happen is we could see the market vibe turn bearish, right? It's not a high probability. We would need to see some aggressive selling come into the market. But if we were to see the market vibe turn bearish, here today, then I'd go out and put the 1,000 on the SPY puts, be able to jump into that. I'd be very surprised if it triggers today. But we'll see here as it goes. So not a lot to do from a challenge perspective. Right, it's pretty cut and dry. Nothing there, and I'll wait until this afternoon. Now, I mentioned earlier Micron close. Now, I went and bought some Micron puts personally. Okay, bought some Micron puts personally here this morning, and why would I go and do this? Well, it's triggering a bearish Katie signal. It has a 3-7 cross down, and it's breaking below the 3 and the 7 and the 20-day moving average all at the same time. Right? And that is generally very bearish when that happens, very bullish when the opposite happens. And so we have that happening here. The last time we had it happen was right here where it broke all three major moving averages and the stock just, took its neck leg up. But has all of that happening right here, and it's an easy stop on today's high, which is kind of what I'm looking at there. So it's one of my favorite setups. I am of the opinion that Micron comes back and retests these lows, and I do think it could go lower than that. But, I know my bearish opinion on Micron is not shared by many. But it's one where, it has had the chance to break out several times, has failed to. In this market, shorting anything is obviously difficult. But one of the reasons it's not triggering for the challenge here this morning, and I talked to you last week about this, slow stochastics is 39.1 on the stochastics, is rarely are we going to see a bearish signal come in on a stock that's trading above 50 on the 39.1 stochastics. What does this mean? This basically means that the stock is trading in the high side of its range over the last 39 days. That's all it means. The stock is, and we can see that with Micron. At 41, it's trading near the high side of its last 39-day range, right? And that's all the indicator is showing us or telling us, right? It's going to be hard to trigger bullish signals below 50 here as well. It's not going to be impossible. In fact, we will see it. We'll see it from time to time, but it will be rare. And so with Micron, while it has a KD signal associated with it, there's 39.1, still above 50 for now. This isn't the reason it's not triggering, but it's one of the things that we'll see a high correlation there with it. So, that one's the closest. Could it be here by this afternoon? It could. It definitely could be a trigger here by this afternoon. You look at some of the other stocks on the watch list, and, from a Caterpillar, which, showed some bullish signs last week, never created a bullish trigger. But it's in a bullish mode here overall. But not creating a fresh new trigger here today. You look at something like Visa, there's no real new trigger element, coming in here to it. So anyway, that's where the challenge sits, and we'll continue there with that. Now the live challenge still have EM running. We need a big move down here this week. Need it to break 43 and then some. To get back in the game. If it's able to get us back in the game a little bit, we'll go have some fun with it. But need a further on breakdown here. I do think EEM is a very interesting put right here. The ones that I have, I think are really aggressive to be buying right here. But the 44 puts, I think, are very tempting. For a little bit more of a pullback with a stop on today's high. But what we've seen is most Monday mornings, any kind of bearish action has been erased. In fact, most mornings where we've seen any kind of bearish action, it's been erased, and that's just the reality. But we're erasing, we're seeing the market sell off here this morning off of Friday's action, where Friday was a gap up that failed to see buyers step in. And, there's a lot of hubbub. Yeah, market's going up. And yeah, you're right. It is. But Friday we saw that gap up and we saw no buyers willing to step in. It was not a gap that was bought with any sort of aggression. And, it's one of those that, okay, are people really buying? Are they really buying out there, or is this just kind of hold on, futures traders taking things up? And one of the things that's very different between the market back here in January and even February is in January and February, we'd see the market open up, we'd see the market rally during the day. Here of late, the big moves up. In fact, the majority of the gains in the market have been due to gaps. They've been due to gaps. The last 5% up in the market, it's pretty much been gap related. It hasn't been, the market opens and now it's going to get bought up. It's going to get bought up aggressively and go. It has been a gap scenario where S&P futures and futures traders have created the gap, and that's kind of where the market ends, or where the market kind of sits. We're not seeing the same type of buying come in that we saw back here in January and February. But that all said, the bears don't have anything. They're still above, the 7-day moving average. It's not like the bears have been able to take anything here and go, let's go sell this and let's go sell that. It's been dark days, for sure for the bears. Now we saw J.P. Morgan earnings on Friday. It was a really good report. Really good report. We showed it on Friday, talked about it on Friday. Was a very good report here for J.P. Morgan. And in fact, I think you could argue that, for J.P. Morgan, it was kind of the equivalent to what Bank of America's report was last quarter, in terms of just quality, quality report. But we talked about how, what J.P. Morgan is experiencing, where their growth is and where their revenues are, that benefits, they're seeing the gains in areas where Bank of America parallels J.P. Morgan. They're not seeing the gains where something like a Goldman Sachs parallels. And we saw Goldman's earnings here this morning, and we saw that. We absolutely saw that. We saw that the flaws in J.P. Morgan's earnings report were accentuated, magnified here in Goldman Sachs report, and we see Goldman Sachs, trading on down. The positives that are out there, within the banking industry, they're within the lending consumer side of things. It's not on the trading desks. The trading desks, and you go look at Goldman's, report, the trading desks are not doing very well in this environment. And I know that comes to a surprise to many when you see a market up a lot and, the trading desks aren't doing well. Well, trading desks don't do well in an anomaly environment, right? And what we had in quarter one, with the biggest gain in the market in a quarter in how many years? 20 some odd years. That's an anomaly, right? And so Goldman first quarter market environment, very much an anomaly. And, we see that reflected here in the trading desks, overall. Citigroup here holding up, and Citigroup doesn't have, those same things as Goldman Sachs. And, Citigroup, Bank of America, they're a little more parallel in terms of what they do and how they do it. And, JP Morgan, the highlights from JP Morgan, we saw those be, relatively strong points here for Citigroup. So, it's one we'll see a few more bank earnings, but Morgan Stanley will report. Now, Morgan Stanley has a little bit of a mix, between, what a JP Morgan is and what a Goldman Sachs is in terms of, what they rely on and everything else. But, it is one where, we've seen the banks now. We've seen the banks, and we saw, revenue misses. In fact, if we put it up visually here with Citigroup, and again, I know we have Bank of America, we have Morgan Stanley still left, but you look at Citigroup, they beat on earnings, right? Which absolutely missed on revenue. Missed on revenue here. And here's the concern that if you're a Citigroup investor, the concern you have is, okay, the expectations aren't very high for the next 2 quarters, right? They're not too high. But here we are, year over year, revenue decline with Citigroup. What do we know with estimates going forward? They always get taken down, right? They always get just dropped a little, historically. And so you drop them a little bit, they're going to be talking about the next 2 quarters without any kind of revenue growth. That's, that's one of the dangers. Now, is it contraction? No. Is it still looking for some revenue growth year over year when it comes to the end of the year? Yeah, absolutely. But this is one of the concerns here when it comes to Citigroup, and we saw with Goldman Sachs, we saw a revenue miss. Now Goldman Sachs revenues can be a little more choppy and everything else, just due to the trading desk and everything else. But if you look at these at Goldman, you look at it year over year, type action. First quarter of last year, huge revenue. First quarter this year, revenue miss, big down, right? Over 10% lower than what it was last year, right? You look at, what's expected next quarter, we're not talking about major growth. You look at what's expected the quarter after that, we're talking about a little bit of growth, the quarter after that, we're talking about a little bit of growth, and then later on this year, probably the biggest point of growth. So, it's one where I think you could really keep an eye on the analysts when it comes to the banks. If the analysts start to drop the revenue targets for the banks later on this year, it's going to put the banks in a year-over-year loss position, which is going to make them look really bad. If we start to see that, and it's going to make the Goldman Sachs of the world, the Citigroups of the world look a little bit worse than the JP Morgans of the world or the Bank of Americas of the world. But that's one thing to keep an eye on. If those revenue estimates are not brought down, we will definitely see the bulls continue to run. Despite all the yield curve concerns and all of that. Now, as we go forward here this week on the calendar, a lot of earnings. Right? Here today, J.B. Hunt after the bell, which is one that most people don't talk about, and most people don't care about. I think it's a really interesting report. When you start to see what's being shipped, what the truckers are shipping across the country, some insights almost every quarter into that. And then tomorrow we'll have Bank of America, Johnson and Johnson, United Healthcare in the morning. Those three will be market movers. Not so much Bank of America, but J&J, UNH will definitely affect the healthcare group. And then after the bell, the IBMs and the Netflixes of the world here. And then CSX, which is another one like JB Hunt. Not a lot of people paying attention to it, but man, when you see what's being shipped on the rails and what the rails outlook is, that generally gives you a better read on things than a lot of others. Then later on, Pepsi, Kinder Morgan, Morgan Stanley. We'll just kind of get a few earnings each day, coming in. The Schlumbergers of the world, Philip Morris. Coming in as the week progresses. I believe, Friday, not a whole lot here. So no real earnings. And then we'll get into next week. And the next 3 weeks after this week are going to be the three kind of jam-packed periods for this earnings season. And, most reports are going to be stuffed into this 3.5 week window where, when the first quarter, like in January, it was kind of a marathon 8 week earnings season. For the rest of the year, there'll be about 3.5 week earnings seasons. And, that's what the norm is here with them. From a macro standpoint, not a lot of catalyst out there, not a lot of news out there, to really drive things in a huge way. So it's one where is price action going to be king? Well, it always is. It always is. But it's one where the markets don't have that they don't have that trade war nugget to sink their teeth into here today. They don't have that kind of that economic confidence, hope to sink their teeth into here today. So a little bit of selling coming in, a little bit of increase in volatility, and we've seen this morning after morning after morning. But most of the time it's kind of bottomed, mid-morning and then just drifted back on up. If we see a change in that pattern, I think that would be kind of a little bit of an alarm bell, here for the market, and perhaps prompt a little bit more selling out there. But the one thing we just continue to see is that the gaps up aren't getting bought. They're not getting bought. Now, they're not getting sold, to any, magnificent degree. The gaps up just simply are not getting bought, the way they were earlier this year. We have stuff like Amazon here today, breaking the 7 for the first time in a while. And so we do have some change starting to take place within some of these major stocks. It's not, a death nail or anything like that, but we are starting to see a little bit of that weakness starting to come in. We saw Apple struggle above 200 all last week, and, still struggling to hold 200. But at the same time, it's not like the bears are getting anything. It's not like they're selling it to any sort of, aggressive degree there. So, as I mentioned when I jumped on, Micron, kind of my favorite downside setup out there. I did jump into this personally here this morning, and just with a weekly, I took a high risk, high reward type of position there with limited exposure. So that's that's how I approached it. But it's one where if the market does move aggressively, Micron could be trading sub 40 here, later on this week. I'm still looking for an opportunity to, add to gold, to put a sizable position here into gold. I have a 20% position that we talked about right back here on this gap down that I jumped into. Haven't had a place to where I can jump into more. You can see, this kind of 121 level being hit again, and it's being hit on this very interesting head and shoulders pattern, right? It's not your typical head and shoulders pattern. It's kind of this three peaks, here. three peaks, three valleys type of thing. But same principle. Lower highs, not quite lower lows here with it. And, there is some breakdown risk here. There's definitely some breakdown risk here. I think the breakdown can get bought and bought aggressively, and I'm looking for an opportunity to do that. But I don't have that here, just yet. I think today what we're seeing is just another kind of little rebound off of support. Really kind of coming into play. We saw the dollar down a little bit here this morning, but nothing to a great degree. In fact, this is more of a bull flag type of pattern that's emerging here with the U.S. dollar. So that could put a little more pressure on gold as we go forward here. All right. All right. Well, thanks for hopping on. Any questions, please let me know. We'll talk to you later. Take care.